Hello and welcome to Crux Investor. We caught up with Roger Lemaitre, CEO at UEX Corp. They are after uranium in the Athabasca Basin. We talked to them about their recent acquisition, JCU, private company. Not too many people know much about it. They should. Really exciting merger. And I think this is a big, bold move from Roger. If you want our thoughts on that conversation, topics discussed, plans for the future and how they hope to achieve them, you can find that at cruxinvestor.com/club, where you can also find detailed company reports and analysis. We've got commentary from experts from around the world, including our weekly uranium show in its 54th week actually now. We've got training courses on there. We've also done summaries of all the interviews that we've done just to save you some time because we know you're busy people. But more importantly, why don't you go and join a thriving community of investors sharing their thoughts and ideas with each other in a nice, friendly, safe environment, free from that judgment, trolling and abuse you see elsewhere. It's wonderful. I think you'll like it. So go and join them, cruxinvestor.com/club. And we'd love your feedback too. So give us a like, leave your comments below. And if you want to see what we spoke about today, do take a look in the description below. Roger, how are you, sir?
Doing very well, thank you. How about yourself?
All good here. All good. I'm loving the piece of hardware behind you. Where's that from?
That's my wife's decorating. She's way more skilled than I am. I'm not sure where she got it from, but it works.
Looks good. It looks like she sort of had you scaling up a town hall and ripping it up from the facade. That's what it feels like. It looks quite cool.
I'm getting old and I have to be able to see the clock. So the bigger it is, the easier it is for me.
So true. I know how you feel. Nothing but sympathy from this side of the pond on that one. Hey, you've been a busy boy recently, and we're going to hear all about it in a second, but let's do our 1-minute overview of the company for people new to the story, and I'll pick it up with the JCU story.
Right on. Well, UEX, so we've always been talking about our large portfolio of opportunities and growing our pounds of resources through our mid-stage resource discovery, but our story's changed over the last week. We're now catapulting ourselves towards being a mid-sized development company with short-term production and a great portfolio that comes from the UX end of things that will sustain us into a mid-sized uranium company for a very long period of time.
Thank you. You better explain what you've done.
So we've just signed a definitive agreement with a company called JCU or OURD, to buy their wholly owned subsidiary JCU. JCU is is the Canadian exploration arm of a company called OURD, or Overseas Uranium Resource Development Company. OURD has been active in the mining space for 40 years across the world. Probably most notable two things that they're most famous for: a part ownership in the Cominac operation that just shut down in Niger, and a 7.5% ownership in the McLean Lake milling operation in the Athabasca Basin. JCU inherited assets from a very legendary Japanese explorer and developer PNC. PNC was successful on 3 continents finding things in the uranium space in the 70s, 80s, and 90s. And when PNC exited the exploration business, when it became part of the Japanese government agency, which is now the Japan Atomic Energy Agency, they sold these assets to JCU. So their JCU and UX they're almost like sister companies because they've been around about the same amount of period of time, 20 years. And we're in the space before it became really active in the last cycle. They have some really amazingly good assets with 10% ownership in Wheeler River, that's now operated by Denison, a 30.1% ownership in Millennium, Cameco's next development project, a 33.2% ownership in Kigavik up in the Nunavut territory, which will be potentially a new camp. And their assets fit with ours and just creates I think 2 half companies turning into one really solid company.
Okay, thanks. Pretty comprehensive background there. What are the terms of the deal? What does it look like? You're talking about 100% ownership for you guys.
So we're owning the assets through we own the company outright, the JCU. We're paying up to $12.5 million cash for these. We're going to assume their liabilities. And we'll own 100% of it, subject to us completing the financing to get what we need to close the deal. And going through their corporate governance process, it's been through their board approval. It formally needs their shareholder approval, and that schedule will be that will happen in June. Just getting 29 of the largest CEOs, chair of the boards, and deputy chairs of Japan's 29 largest-ish companies. Pretty hard to do in short notice. So
yeah, but there's a process that's been agreed. So let me just try and understand what you just said. So $12.5 million in cash plus liability. So what's the total cost of this thing?
Right now, it's about $12.5 million.
But what are the liabilities that you're exposing yourself to?
They have a liability that's technically on their books. It's a royalty. And so for all of when JCU was formed and they bought the assets from PNC, the purchase price was nominally $19 million. And it's charged 3% sort of interest. But the only payments to ever be made towards that principal and interest are if there's free cash flow from operations. So it's not, and that liability will expire and be forgiven on March 31st, 2030. So it's more of a royalty stream that has a sunset clause based on time than of the asset itself. And so the book value of that we're anticipating will be when you fair market value that royalty stream, it'll be a couple of $1 million maybe on our books at the end of the day. So we're paying $12.5 million. JCU is going to have cash in its pockets when it comes to us. So we're going to see that $12.5 million gets deducted some cash as well. So $12.5 million is about right.
Okay, so why are they selling? I get Cominex closed down, so not much going on there. Why? What else are they offloading, and how on earth did you end up with this asset? What's your connection?
I'll start with the second question first because that's a lot easier for me to understand. Our team and myself, even in our previous lives, when we worked for a major uranium mining company, managed a lot of these assets from that company's point of view with JCU as a partner. And our team, for example, our exploration manager and senior geologist were on the delineation team at Millennium. We've got a long personal history with the principals at OURD, but also since we've joined, or since we've been in UEX, UEX has had a joint venture with Orano and JCU since 2008 at Beatty River, which is just south of Shea Creek. But more to do with probably building that trusting relationship with them is with Christie Lake deal that we did in 2015, 2016. So I think we've got a mutual bit of trust between us. We've always tried to do what we say we can, and what we promise to do. And I think that there's some value that when they went to look at selling these assets, they came to us. I'm sure they went to others. We were just able to negotiate a deal back in January that finally came to its fruition here just last week.
But why are they selling at all? Uranium's going to be a bumper market. There's money to be made, and then there are hills. So why are they selling?
I honestly don't know the answer for that. I mean, I think if you look at OURD and you see that they have a mine that's just shut down. They have a minority stake in a mill in the Athabasca Basin. I think I'm speculating completely. You look at their shareholders and go, okay, they're the Mitsubishi, Sumitomo, TEPCOs of the world. This is a very small business, and maybe it's not the right time for them to get out.
So why are you positioning it as, two small companies coming together, make a medium-sized company when there's not much happening in the marketplace? How can you make that claim?
I think when you look at our portfolio of assets, we now span. You have to go picking up development projects that are ready. Probably the next one, like Weeder River, Millennium will be Cameco's next development project after that when they need to replace Cigar Lake pounds. And then a long-term vision with Kigavik. Our UEX's assets that we bring to the table are projects that are ready to move towards development, and then that mid-stage portfolio. And I think what this does, it gives a short to medium to long-term visibility production with assets ready to replace those and lower risk exploration mid-stage projects behind it. And it creates what looks more to me like a mid-stage copper company or a mid-stage gold producer than it does a typical Athabasca explorer or developer, which tends to be a grassroots company or a single project development company.
So I'm sort of intrigued because, if you look at some of the issues that you've had in the past, people are going, so many assets, so much optionality, and you need money to go and develop those out, however you prioritize them. And you do this deal and you go, oh, good, more assets. That's just what I need. So how do you go to market? One, you've got to go to market and raise minimum $12.5 million. It probably a lot more, and presumably money to go and be able to develop the near-term producing assets that you were talking about. So how much money do you think you're going to need to get to market and raise? And what's that going to cost you?
Yeah, no, fair. The long-term, the only thing that actually costs us money that we have absolutely no discretion on over the next couple of years is Wheeler River. And not that we would care to even, we want to participate in Wheeler River. So we're excited to do so. The Phoenix ISR project that they're going through now, the pre-feasibility study had a CapEx cost of $322.5 million. Our share is 10%. And that's sort of 4 or 5 years. That's going to be spread over a 4 or 5 year window as they ramp up. So, yes, we're going to have to go to the market, but we're not asking for tens of hundreds of millions of dollars here to get Wheeler going. Once Wheeler is going, we're going to be in a cash flowing situation. Then we'll deliver our opportunity to develop those other projects, which we think come after Wheeler River. And yes, what do they look like? I don't know just yet, but that's a issue we'll have 4 or 5 years down the road to fund. Short term, funding, other than funding Wheeler River, everything else in our portfolio is completely discretionary. We can decide whether to do something or not. And we don't have to. We have on our core assets over 21 years worth of assessment credits to hold those in good standing. The properties we're picking up from JCU at the grassroots level are being run by Cameco, Orano, and Denison. And Cameco and Orano have cut back on exploration over the next couple of years. So I don't see a huge ramp up next year. We complete the deal. JCU comes with enough money to fund our Wheeler River expenditures through to midway to near the end of the first quarter of next year. So we're going to have to finance a transaction. I think when we look at financing transaction, the 12.5 is a must. We're going to probably add a couple of dollars here or there, 15, go to max of 15, 20 total, including the purchase price, to fund all of our potential obligations through the end of next year, 2022. And then we'll evaluate. We have options to do things with the assets that we can monetize over time. As if the market continues to improve in the uranium space, we have a ton of grassroots projects that would be top notch for anybody else entering the space to come and partner with us. And we've always, like we've had with our existing grassroots projects, it's all about the right timing and getting companies that can come out and answer some questions for us in a short term, not taking an option on an option.
Okay, well, I guess that's what I was getting at with the what's it going to cost you bit, because how much you have to spend. Great answer. Distraction, because you already had a plan before you started making the decision to buy JCU when it's presumably end of last year at some point. You had a plan. This changes things dramatically in the order of play, dramatically in allocation of capital, dramatically. It's effectively a new company. You're saying to me it's a nice mid-sized company here, guys. Pay attention. Market's gone.
Yeah.
Why?
I agree.
Why aren't they not as excited as you are?
I think there are 3 key reasons. One, of course, we're going to have to raise money. So I think once we get that tied down, that will help. We get a lot of who the heck is JCU? Because we never heard of them. And 2 of the key projects in the portfolio have never had market exposure before. So Millennium's not really had market exposure, and Kavik's not had market exposure. Everyone understands Wheeler. They go, great, you're getting a piece of Wheeler. And some people say, yeah, it's a cheap way for someone to get into Wheeler. But we need to get a little bit of the word out about what are the other key assets that are coming to the table that create value for shareholders. And that's going to take a little bit of time. We would love it to have been yesterday, but we realize it's going to be a few months down the road before people start to really understand where it goes.
Right. So, and the reason I don't understand is JCU was not public, was it? It was a private company.
No, it's all private, and their main shareholder is also all private. So, no, people have heard about Kavik. People have heard, what does it mean? Well, we will see what the market value of these pounds are when they become available through JCU or through UEX with this transaction, and we'll let them decide what the value is. Same thing with Millennium. We go, well, man, that's not every day you get to walk into a 30.1% interest in Cameco's next development project, but it's not been in the public domain. So we have to educate people what Millennium is and what it means to the uranium space, particularly in the Athabasca. And then, of course, that will have a benefit for UEX.
Well, forget educating them. They don't want to work it out. They want you to tell them. So, have you got a view of what it's actually worth? You paid, you haven't closed it yet. You've got to be careful. 12.5 million. But you must have a number in mind that it could be worth for you in the future if you are able to communicate it.
Well, so we're going to end up owning 31.5 million pounds of the current resource. Okay, so no matter what metric you want to put on this value, whether it's $1 or $5, it's worth a lot more than what we're going to pay for it. And so if you want to put an Athabasca average on there, which is $4.68 a pound, multiply it out, see what you get. If you think, oh no, you're the minority partner, you're going to put a discount on that, well, put a 50% discount on that. So be it. It's still worth a lot more in the long run. And it's just about getting people to understand that over time.
Okay. Interesting. I guess people can go and do some quite simple math there, do some peer analysis. Tell me about Wheeler.
It's not in the public domain. So it hasn't been in the public domain because it's been in the hands of major and private companies.
I understood. I'm just in terms of valuing the pounds on the ground, as it were. People can go and do some peer analysis and averages there.
I look at Millennium and I sit there and say, okay, what's happening in the Athabasca Basin? What are the development projects that are out there? Right? These assets give us 6 of the next 10, our ownership stake in 6 of the next 10 uranium projects in Canada. 3 of the next 6, what I call tier 1 projects, which are the ones likely to go in the next cycle. So we're going to have an ownership stake in half of those. So you can out there and say, okay, there's an Arrow, there's a Wheeler. We're going to be part of that. There's going to be a Triple R. And then you got Millennium. Millennium is going to be there to replace Chemical Pound. So we have a lot of confidence that's going to move forward in the next cycle.
Right. And in the next cycle, when's the next cycle? Let me know.
You tell me. You tell me. We all believe it's imminent, but it's all about the resilience of utilities to decide when they want to start securing contracts.
Has Wheeler got a permit yet?
Wheeler's in the permitting process. They've filed a project description with the regulator, and the plan is in the first quarter of next year to finalize the final EIS for submission to go through the public hearing process.
What's that?
So
how long does that take?
That takes usually the process usually takes a couple of years to go through.
Gotcha. Okay. When will you close this transaction then?
Before the end of June.
Before the end of June. Okay, so not too long. How long did it take from first conversation through to where you are today? I mean, how long does it take to close these sorts of things?
Very first conversation, 15 years.
Oh, stop it.
If you talk about the most recent conversation, we started in second week in December, excuse me.
Got it. Interesting. Okay. That's interesting. Should we talk Cobalt a little bit? It's our favorite topic, isn't it?
I love Cobalt. I mean, my goodness, I give all the credit to our team in the world of finding a second Cobalt deposit on the West Bear project, proving up that what we're doing has got some legs to it. We can actually find more of these. We've always been very keen on monetizing value for our shareholders, and we don't believe it sits in UX long term, but it's about getting the right balance. And with this transaction, it probably accelerates our need to move this forward quicker and maybe not try to squeeze every dollar out of that we can, but we'll try. That's the plan. Anyone who's in the space knows that we're looking for opportunities. And so we're waiting for people, and we've now reaching out to people actively, and we're waiting for people to come back to us with ideas. But we've been through a bunch of them over the last several years, and they just haven't been the right ones.
Right, you want to pick the right partner to make sure value is created. I can understand that. It's a very small space, very, very complicated, opaque space, slightly weirder than uranium, if you need to know. We've been investigating, right? So it's, there are not too many players out there, I think. Have you spoken?
There's very few explorers out there right now. Very, very few. They've all, there was a whole lot of them when the craze happened in early 2017, 2018, and they've all sort of disappeared because they didn't necessarily have the right assets or quality assets. There's some really good names in the space, but they're not exploration stories. I think that's kind of where we have our Cobalt assets today. They're kind of exploration stories.
Oh, every Muppet was jumping on the Cobalt bandwagon back then. You didn't have the right management team, let alone ask that. Said the embittered investor. So when will you give guidance to the market as to timing on fundraise? I guess it's fairly imminent, but more importantly, how you thinking about allocating funds across the now enlarged portfolio?
Well, we're certainly going to have to close something here before the end of June to be able to meet the financing. So that you're probably talking in the next couple of weeks before we make that formal announcement of what we're doing. Our view is, while there still seems to be a lot of demand for uranium equities in this space, to continue to follow our process we have for the last several years, and that is, what do we need, not what we could get. And so the plan will be, let's finance what we need to make the transaction and finance through the end of 2020. We have our G&A already covered with our existing treasury, so we don't need to raise money for G&A purposes. But what do we need for Wheeler River, and do we want to do a little bit of work on those mid-stage opportunities in the same conservative approach that we've done so far. So I don't see us, I see us the fundraising here in the $15 to $20 million range to be realistic. And we'll see where things are at the end of 2022 as to what we want to do. We're pretty comfortable that will cover all of us well into and then some beyond 2022.
Do you want more questions that we've talked about before asked of you? Should we do that? Let's do it.
Sure.
Okay.
Go ahead.
So why is the book value at 0.04 Canadian dollars?
Back in 2016, UEX made an accounting change based upon the historical expenditures we put on our projects. Most companies, and I'd say especially the newer companies out there in the space, capitalize their expenditures, so it makes a really large book value. We expense ours instead. But if you were to actually say how much has been expended, we'd be pretty comparable to others. It's just an accounting difference.
Right.
Versus capitalizing versus expensing.
Okay. And when do you get a sense of what the total overheads will be for maintaining all of these assets? Will you be looking to offload some of the less priority assets as a means of generating cash, not just the cobalt component, but other of the smaller uranium projects?
I think that's certainly an option in the portfolio. It's for us. We think it's the wrong time to do that right now. We think that if we believe, as we do, that the market's going to improve, then we need to hold for a while and see what the options are. Particularly on those low end assets, we want to see a lot more of them working for us. But we want to find partners who can come around and spend a couple of seasons of drilling or whatever work they need to do some first pass evaluation in hand before we start making partnerships. There's no sense tying up properties for any old reason. And it gives us a lot of options going forward as well. It's not just partners. It's do you do a grassroots spin out? So we don't know. I think we're going to let the market dictate those decisions for us to a certain degree. And I don't mean dictate this because that's probably the wrong wording. It's more of we'll take advantage of the right opportunity at the right time. But we're keeping all those balls, all those options open for us right now. It's just too early to make that call right now.
Right. So given you're about to go into fundraising mode, does that mean all work at Michael Lake stops, all unnecessary spend stops?
We still are. We haven't made a final decision. We have about $2 million program planned for Christie Lake this summer to continue to work at Aurora North and along the beach trend to try to grow resources there still. We've thought about it. Our board still hasn't made a final decision whether we go ahead with that or not. So I don't really have the answer for you. I think if we're inclined to spend that money. It's flow through money, so we're inclined to spend it. We have till the end of next year to spend it if we want to. But yes, on other things right now at Michael Lake, we're probably going to, say hold, even though we have a brand new discovery there that needs a lot of work, we're probably going to be holding tight, especially since that's now a cobalt asset, not a uranium asset. And I think we understand the shareholder frustration with not finding that opportunity at the right time, but also it sends a rude message that, we just performed a pretty good sized uranium company, and we're putting our financial resources into cobalt. Probably not the right choice.
Yeah. Okay. I think that's right. Well, look, thanks for the update. That's great. Actually, one last question. Is this a new company? I said it earlier. Is this a new company?
We believe so.
Right.
We believe so. We think it's a brand new company.
Because why? What makes it a new company, Roger? What makes it a new company? Is that because you've bolted on something, a merger of equals, not merger, an acquisition of equals, as it were? Is it because the thinking's going to change? The approach to the market's going to change because of the optionality that you've just bought or hope to buy?
Yes. And just because we have a pipeline of that goes from one end to the other that you'd want to have a long-term sustainable company. So yes, we're going to operate it like a long-term sustainable uranium company.
Beautiful. Roger, thanks very much for picking up the phone. Stay in touch. Let us know when you get this thing over the line in June. We'd love to sort of see what your plans are, how you hope to inform and educate the market. Interesting times for you guys. Well done.
Well, thanks, Matt. Appreciate taking the time talking to us again.